We thought the $5 million lawsuit exposed all of Matt Roloff's hidden financial maneuvers. We were wrong. Today, we are looking at the exact moment Amy Roloff's accountant cracked open a digital vault, uncovering a massive network of secret offshore accounts Matt allegedly used to hide his wealth from his own family. My read on this situation is that it fundamentally changes everything we thought we knew about the Roloff family dynamic and the farm buyout. It shifts the story from a bitter family dispute over property into a genuine financial investigation. I think many of us watched the television show for years and believed we understood the power balance. Matt was the dreamer with the expensive projects, and Amy was the grounded one trying to keep the budget under control. But what this new information suggests is a level of premeditated financial secrecy that goes far beyond buying an extra tractor or building a replica pirate ship. We are talking about shell companies, international banking, and a carefully constructed wall of paperwork designed to keep the farm's true revenue out of Amy's hands. To truly understand the weight of this discovery, we have to go back and look at the foundation of the farm and the financial dynamic that existed between Matt and Amy for decades. When you build a business with your spouse, the lines between personal money and company money often become completely blurred. The farm was not just a piece of land. It was a massive commercial enterprise, a television set, a tourist destination, and a family home all wrapped into one extremely complicated tax return. For years, Matt was the one driving the massive investments. He wanted the heavy machinery, the expansive attractions, and the constant renovations. Amy was frequently portrayed as the person pumping the brakes, asking how they were going to pay for it all. This established a pattern where Matt was essentially the chief financial officer of their lives. He controlled the flow of cash, he approved the big purchases, and he managed the complex network of contractors and vendors required to keep the farm running. When the marriage ended and the discussions about buying out Amy's portion of the farm began, that historical power imbalance became a massive liability for her. She was trying to negotiate the sale of her life's work without having total visibility into the actual financial health of the business. The public watched the tension of this buyout play out on screen, but the television cameras only captured the emotional side of the negotiations. They did not capture the intense legal and financial scrutiny happening behind closed doors. This brings us to the $5 million civil suit. Winning a civil suit of this magnitude is not just about a judge handing over a check. It fundamentally alters the legal landscape between two people. When Amy's legal team secured that victory, they also secured something far more valuable than immediate cash. They secured the right to audit Matt's historical business expenses. I want to explain what this audit process actually entails, because it is the crucial setup for the massive twist in this story. When you are negotiating a corporate buyout, especially one tangled up in a divorce, the exiting partner needs an absolute guarantee that the valuation of the business was accurate. If Amy is being paid for her half of the farm's value, she needs to know exactly what that true value is. More importantly, she needs to know if any money was quietly drained out of the company accounts before that final valuation was calculated. This right to audit is essentially a look back in time. It allows financial investigators to comb through years of ledgers, receipts, bank transfers, and tax filings. Usually, this kind of routine check is straightforward. The accountants go in, they verify the equipment depreciation, they check the payroll records, and they ensure the tax returns match the internal books. They are generally looking for simple errors, misclassified expenses, or basic discrepancies that might adjust the final payout by a few $1,000s. They expect to find messy bookkeeping, which is common in family businesses. They do not expect to find a hidden vault. During this exhaustive review of the farm's historical expenses, the accountant noticed an anomaly. It was not a massive, glaring error, but rather a quiet, persistent pattern. There was a series of consulting fees being paid out on a regular basis from the farm's main operating account. I think anyone who has ever studied corporate accounting or followed financial investigations knows that consulting fees are the oldest trick in the book for moving money around. If you want to pull cash out of a business without raising immediate suspicion, you do not write a check to yourself. You write a check for a service. The beauty of a consulting fee, from a deceptive standpoint, is that it is entirely intangible. If the farm buys a new backhoe, an auditor can walk out into the field and touch the backhoe. There is physical proof of the purchase. But if the farm pays for logistical consulting or management advising, there is nothing physical to point to. You just need an invoice and a corresponding bank transfer. The accountants noticed that these specific consulting fees were being paid to an unknown limited liability company. This LLC had no obvious website, no local physical address in Oregon, and no apparent connection to the agricultural or entertainment industries. It was essentially a black box receiving regular infusions of farm cash. The financial team began the tedious process of tracing this unknown LLC. Discovering the true owner of a private company can be a frustrating process, even for seasoned professionals. People who want to obscure their ownership often register their companies in states like Wyoming or Delaware, where corporate privacy laws are famously strict. In those states, you can hire a registered agent to put their name on the public documents, shielding the actual owner from casual public records searches. The accountants likely expected the trail to end at a generic lawyer's office in Delaware. That is not what happened. The trail did not end in the United States at all. The investigation revealed that this dummy LLC was not a domestic consulting firm. It was a shell company registered in the Cayman Islands. I am not an international banking expert, but it is common knowledge that the Cayman Islands operate as one of the most secure tax havens on the planet. They offer intense corporate privacy, zero direct taxation on corporate income, and a legal wall that makes it incredibly difficult for foreign entities to peek inside their financial institutions. Establishing an offshore shell company is not something you do accidentally. It requires intent, specialized legal counsel, and a significant amount of money just to set up and maintain. This discovery completely changed the nature of the audit. An Oregon pumpkin farm has absolutely no legitimate agricultural, logistical, or promotional reason to be wiring recurring consulting fees to a shell company in the Caribbean. It makes no business sense. The only logical reason to structure payments this way is to move domestic revenue out of the country and hide it behind a wall of international privacy laws. Matt was allegedly taking shared farm profits, labeling them as business expenses to reduce the farm's taxable income, and shipping that money offshore. But the geographical location of the bank account was only the important part of the twist. The accountants pushed harder. Through the discovery process of the civil suit, they managed to pierce the corporate veil just enough to find the primary signatory on the Cayman account. The person with the legal authority to move the money, sign the checks, and manage the funds was not Matt Roloff. The account was registered under Karen Chandler's maiden name. Let us pause and really look at what this specific detail means, because my read is that this is the most shocking aspect of the entire situation. Karen was the longtime farm manager before her relationship with Matt transitioned into a romantic partnership. She was deeply involved in the day-to-day operations of the business. She knew how the money flowed, she knew the vendors, and she knew the revenue cycles. Using her maiden name on an offshore account suggests a level of premeditation and strategic planning that is genuinely difficult to process. Why use a maiden name? If the goal is pure anonymity, a wealthy individual usually sets up a blind trust or hires a proxy director to manage the shell company. Using a maiden name is a very specific choice. It provides a layer of superficial protection against a basic domestic asset search. If Amy's lawyers simply ran a standard search for assets under Matt's name, or even Karen's current legal name, this account would never show up. It would remain completely invisible. Yet, by using her maiden name, Karen maintained absolute, direct control over the money. It implies that the wealth was not just being hidden from Amy, but it was being actively transferred into the control of Matt's new partner. I think the psychological impact of this specific detail on Amy must have been staggering. For years, she had voiced her insecurities and frustrations about feeling sidelined in her own business. She had expressed discomfort with how quickly the boundaries blurred between the farm's management and Matt's personal life. Finding out that shared family money was allegedly being routed to an offshore account controlled by the former farm manager, hidden behind a Maiden name, is the ultimate validation of every suspicion she ever had. It is a complete vindication, but it is the kind of vindication that brings absolutely no comfort. This brings us to the climax of the investigation. The confrontation did not happen on a reality television set. It did not happen in the driveway of the farmhouse with cameras rolling. It happened in a deposition room. I want to set the scene of what a civil deposition actually looks and feels like, because it is entirely different from the manufactured drama of television. A deposition is a formal, legally binding proceeding. It takes place in a sterile conference room. There is no judge present, but the legal weight is identical to being in a courtroom. You are sworn in under oath. A court reporter sits at the end of the table, typing a verbatim transcript of every single breath, pause, and word spoken. Lying in a deposition is perjury, a serious crime. Your lawyers are there, the opposing lawyers are there, and the air is usually thick with tension. Amy is sitting across the table from Matt. They have decades of history between them. They built a massive television empire, raised a family, and then went through an incredibly public, incredibly painful separation. Matt likely walked into that room feeling completely confident. He had spent his entire life navigating complex business deals, managing contractors, and outsmarting local zoning boards. My guess is he believed his financial architecture was untouchable. He had built what he thought was the ultimate fail-safe. Even if Amy's team audited the farm, he probably assumed they would just see a series of boring consulting invoices and move on. He never expected a local Oregon accounting team to have the resources or the persistence to trace a dummy LLC all the way to a signatory document in the Cayman Islands. The questioning begins. The lawyers likely walk Matt through his general financial practices. They establish his understanding of the farm's expenses. They lock him into his testimony. And then the moment arrives. Instead of raising her voice, instead of engaging in the kind of bitter back and forth that defined so many of their on-screen interactions, Amy simply slides a piece of paper across the polished conference table. It is a printed bank statement. It clearly displays the Cayman Islands routing numbers. It shows the name of the dummy LLC. And right there on the signature line, it shows Karen Chandler's maiden name. The prompt describes this as the exact moment all the color drains from Matt's face, and I can completely picture it. It is the physical reaction of a man realizing his deepest, most secure secret has been placed right in front of him under oath. In that split second, the entire power dynamic of their relationship shifts permanently. All the years of Matt controlling the narrative, controlling the projects, and controlling the finances collapse in the face of a single sheet of paper. He knows instantly what the document is. He knows the legal team knows what it is, and he knows that his failsafe has just become a massive liability. I want to take a moment to look at the other side of this situation. I think it is crucial to engage with the most charitable interpretation possible, because high-level finance is rarely completely black and white. What is the counter-argument here? Is there any universe where setting up an offshore LLC under a partner's maiden name is a standard, innocent business practice? Some legal and financial professionals might argue that high-net-worth individuals use offshore accounts all the time for perfectly legal reasons. The primary reason is usually asset protection or international investment. Perhaps Matt and Karen were planning to diversify their portfolio by purchasing real estate in the Caribbean or Central America. If you are buying property internationally, setting up a local entity like a Cayman LLC can be a very standard, tax-efficient way to handle the transaction. It limits your liability and streamlines the purchasing process in foreign markets. Another argument could focus on Karen's independence. Karen was a professional in her own right before she became romantically involved with Matt. She had a career and she may have had her own external business interests. Someone defending this setup might argue that Karen had independent consulting clients or separate ventures, and she chose to operate those ventures under her maiden name for personal privacy. In this charitable view, the offshore account is just aggressive wealth management, not a malicious attempt to steal from the family farm. However, this charitable interpretation completely falls apart when you introduce the context of the corporate buyout and the civil suit. If you are going through a divorce and negotiating the buyout of a massive shared asset like a farm, the law requires absolute, total financial transparency. Every single dollar of revenue, every liability, and every business expenses must be disclosed so a fair valuation can be reached. Even if the Cayman account was originally set up for a legitimate future real estate investment, funneling shared farm revenue into that account and hiding it during a buyout negotiation is legally indefensible. It stops being aggressive tax planning and starts looking exactly like asset concealment. The secrecy is what destroys the defense. If the consulting fees were legitimate, they should have been fully disclosed during the initial valuation. Hiding them under a maiden name offshore proves that the intent was deception, not just privacy. This brings us to the massive fallout of this discovery and why Matt is suddenly facing a crisis much larger than a bitter ex-wife. Hiding assets during a corporate buyout is a serious offense, but moving undeclared money offshore elevates the situation from a family court dispute into federal jurisdiction. The Internal Revenue Service takes a deeply aggressive stance on hidden foreign wealth. The United States tax system is based on global income. If you are an American citizen, you are required to report and pay taxes on your income, regardless of where in the world it is held. Furthermore, any U.S. citizen with a financial interest in or signature authority over foreign financial accounts that exceed certain thresholds must file specific disclosures with the federal government every single year. If Matt was taking farm revenue, writing it off as a deductible consulting expense to lower his domestic tax burden, and then parking that untaxed money in the Caymans, he is facing a nightmare scenario. The IRS does not care about reality television ratings or family farm disputes. They care about tax evasion and corporate fraud. The penalties for willfully failing to disclose foreign accounts are incredibly severe. They can include massive financial fines that sometimes exceed the total balance of the hidden account. And in egregious cases, they can include federal prison time. Matt is no longer just answering to Amy in a deposition room. By utilizing an international shell company to allegedly hide marital and corporate assets, he has potentially exposed himself to federal investigators. The local civil suit over the farm's valuation has inadvertently unearthed a paper trail that could trigger a massive multi-agency audit of his entire life's work. This places Amy in a wildly complicated position. She has the printed statements, she has the proof of the Cayman LLC, the consulting fee transfers, and the signature documents bearing Karen's maiden name. She has finally achieved the absolute vindication she sought for years. She proved that her suspicions about the farm's finances were correct all along. But having the proof and deciding how to use it are two very different things. She can use these documents strictly within the confines of the civil suit to force a massive financial settlement. She could demand that Matt reimburse the hidden funds, cover her legal fees, and restructure the entire buyout agreement in her favor. Matt would likely have no choice but to agree to whatever terms she sets, knowing that she holds the evidence of his offshore network. Or she could take the bank statements and hand them directly to federal authorities. She could walk away from the family court negotiations entirely and let the IRS dismantle the financial empire Matt tried so desperately to protect. I honestly do not know what I would do in her position. It is one thing to fight for your rightful share of a business you helped build from the ground up. It is an entirely different burden to make a decision that could potentially trigger criminal investigation into the father of your children. The anger and the feeling of utter betrayal must be overwhelming. For years, she was made to feel like she was being unreasonable or overly anxious about money, while a shadow the financial system was allegedly operating right under her nose. The shredder has been emptied, the documents have been pieced back together, and the vault is wide open. The failsafe failed. Everything Matt thought was buried in the Caribbean is now sitting under the harsh fluorescent lights of an Oregon legal office. The long game of financial hide-and-seek is officially over. The only question remaining is how far Amy is willing to go to secure her ultimate justice. Should she keep this within the family lawyers and take the financial win? Or should she hand the entire file over to the federal government and let the chips fall where they may? Whatever she decides, she finally holds all the power, and Matt is entirely at her mercy.